Good morning, everyone. This is Brian Patrick with ForexTradeAlarms.com, and I have a new video for you today discussing the topic of divergence. What is divergence? Basically, it's when a trend line on a chart does not agree with the trend line on an indicator. Basically, I'm running here a pound dollar 4-hour chart, and you can see, looking at the top left corner down to the right corner, the price is clearly in a downtrend, although it's starting to consolidate a little bit here and possibly go up. What I've done is I've drawn a trend line from the bottom of this candle to the bottom of this candle, just a standard trend line, and you'll see it's clearly pointing down. Okay, I've also drawn a trend line from the bottom of here up through here to match the same points on the chart. Okay, now this trend line is not pointing in the same direction. It's actually going up, and that's what's concept called divergence. The trend lines don't match. The price chart and the indicator are not doing the same thing. Okay, now I want to show you real quick. I'll draw a couple other trend lines here. Let's say I had used a trend line from here down to here. Okay, and then I'll do the same thing on the chart here to here. Okay, you see how these trend lines are both pointing in the same direction. They're in agreement with one another. Okay, these two trend lines here are not. Okay, let me just clear this up a little bit for you. Okay, so I've got the price trend line going down and the MACD trend line going up. So we've got a situation of divergence, and that basically indicates that it's possible that the price may reverse and follow what the indicator is doing. Okay, now not always. You don't want to use this method of divergence as your only indicator to enter or exit a trade. You still want to use I don't know how you trade, but you still may want to use moving average cross, some other methods to enter and exit your trades. Basically, the concept of divergence helps identify a possible price reversal. So you can use that in conjunction with your other methods to either get into a trade or perhaps get out of a trade. For example, let's say you are actually in a trade and you put a sell order in here. I mean, you're looking at a huge number of pips, obviously. But with this divergence here, you say, well, okay, maybe I can ride it for a few hundred more pips. With this situation of divergence here, let me just put a line here. Okay, you might want to consider, you might look at this chart and say, wait a second, the price could reverse. Maybe it's time for me to get out and close this trade, bank all these hundreds and hundreds of pips that I've been able to grab. So again, you don't want to use this as your only method of entering or exiting a trade. I'm going to go ahead and clear this up, take that off for you. Okay, and basically, let me show you the MACD settings real quick. I've got a fast EMA of 5, a slow EMA of 13, and the last setting is at 1 applied to the close. Again, this is a 4-hour chart on the pound dollar. What I would suggest you do is use your normal indicators, RSI, CS, CCI, MACD, whatever ones you like to use, and then be on the lookout for opportunities like this. Okay, I'm also going to switch over to a chart where I've installed the RSI indicator. Okay, we still have the trend line from the price chart up here, and the trend line on the RSI indicator is not quite as steep as it was on the MACD. You'll see how we've got a nice steep angle here. On the RSI, it's not quite so steep, but it still is divergent. The trend line on the price chart is going down. This one is going up, although slightly it is going up. Okay, and that's just an RSI with a 14 period. I've also added this CCI indicator, and again, it's not quite as steep as the MACD indicator, but it still nonetheless is a trend line going up. You see here especially the price made lower lows, but here the the CCI price did not make a lower low. So again, this is a possible sign that the price may reverse and change direction to match what's happening with the indicator down below, the CCI, the RSI, or the MACD. Of these three, it's obvious that the MACD is clearly the most divergent. One other tip you can use when you're looking at the MACD, you see how it makes the different peaks and valleys. If you trade using double tops or double bottoms, head and shoulders, those sort of things, you can also look for those things on this MACD, separate and away from the divergent. And I'm actually going to go into this in a later video, but that's just kind of a sneak peek for something that's going to be coming down the pike. You know, look for head and shoulders on your chart. You can also look for them down here on the MACD indicator. One other thing I want to point out about what the price is doing here is you see down here on these charts we've got a low of 42.54, a low of 42.29. So you kind of see how this is meeting resistance down in this area here. That is just, you know, another way to confirm that the price may not continue to go down, but in fact may reverse just a little bit. And as you can see here, the price is you know, possibly going to go back up a little bit. We just, obviously time will tell. We don't know, but it appears that it may be doing what we think it's going to do based on this divergent between the three different indicators. So again, divergence is basically the difference between what the price action on the chart is doing and what the indicator down below the chart is doing. Okay, the price has been in a downtrend. Specifically, I looked at this candle here and this candle here. And I drew a trend line touching both candles, and the trend line is clearly going down. I've drawn the same trend line on my MACD indicator right here and right here. This trend line is clearly going up. So that divergence is a possible clue that the price may reverse and start heading back up again. Again, you don't want to use this solely for your entry or exit points. This is just a helpful tool that you can use to help you, you know, confirm your other indicators, confirm maybe some support and resistance here, maybe confirm a moving average cross, some sort of thing, whatever method you're using. I would definitely encourage you to experiment with this. Be on the lookout for opportunities of divergence like this. There's other indicators you can use if you like. I've just chosen the CCI, the RSI, and the MACD to give you an example. So, and again, you can use this on any time frame you want. Just bear in mind that in short time frames like the 5-minute and the 15-minute, you obviously may get some more noise than you would on like an hourly chart, 4-hourly chart, and definitely the daily chart. So again, this is Brian Patrick with ForexTradeAlarms.com talking about the subject of divergence. And be on the lookout. In a few weeks, I'm going to be doing a new video touching on the head and shoulders, double tops, double bottoms, those sort of things that you can look for using the MACD indicator down at the bottom of your charts. So if you have any questions about this method, just send us an email to support@ForexTradeAlarms.com. If you have any general Forex questions, like what is spread, what is a pip, those sort of things, please direct those questions to questions@ForexTradeAlarms.com, and we will try to get your question answered and posted in the members area. Again, Brian Patrick with ForexTradeAlarms.com, and I hope I've given you something to think about and that you can possibly add to your trading toolkit. Thanks a lot, and we'll see you next time.